for joining us here at the British Business Bank for this year's Business Finance Week. This is the second iteration of the showcase event after the great success of last year's pilot. I'm Louise Taylor, I'm the Chief Executive of the British Business Bank, and I'm delighted to welcome you here. I'd also like to thank the many partners across the nations and regions of the UK for their collaborative effort in making this week a reality, whether through marketing support, providing hosts and speakers, or individual events. So the British Business Bank, for those of you who don't know who we are, is a government-owned but independently run business development bank. We're dedicated to making finance markets work better for smaller businesses across the UK. So we know that navigating the world of business finance can be challenging and that it can be difficult to know what's available, what's right for you, how to apply. And that's why we've set up this Business Finance Week to help smaller businesses learn about the different finance options available to them to support their individual ambitions and growth. So the week's split into 5 themes across 27 events that highlight every stage of a business's finance journey: startups, growth, thriving, innovation, and next steps. We hope you find all of the days insightful and take a great deal from them. But today's theme, to open the week, is starting a business. Supporting startups is a real passion for us at the British Business Bank. And when I meet business founders, I'm constantly struck by the breadth of creativity and imagination, not to mention sheer resilience, determination that they show as they look to start and grow. Our Startup Loans programme, which began as a £10 million pilot in 2012, has become a really remarkable success story, providing up to £25,000 of capital and support to help people turn their dreams of business ownership into reality. Early this year, the programme passed 2 fantastic milestones. Firstly, providing our 100,000th loan, and then marking £1 billion of finance provided to UK startups. Startup Loans has helped to reduce the risk for so many people and to help to reduce inequalities in access to finance also, providing 40% of our funding to women and more than a fifth to people from Black, Asian and other minority ethnic groups. You'll be hearing more details about the programme and how it works from Anthony Turner, our Director of Credit and Lending, later in today's session. The bank's Finance Week, Business Finance Week, comes at the end of a busy year for the bank. And I thought I'd just finish by reflecting on some of the most recent work we've been doing to support smaller businesses. Alongside our existing programmes, one of our most exciting new initiatives is the rollout of a series of new nations and regions investment funds, which will commit £1.6 billion of lending to smaller businesses across the UK. These are already launched in the South West and in Scotland, and later this month we'll be launching funds in Northern Ireland and Wales. And then we will also be expanding our existing funds in the north of England, in the Northern Powerhouse, and also in the Midlands through the Midlands Engine Fund in the new year. So we're really getting finance into parts of the country that need it. As well as starting up, there'll be greater choice of funding for businesses at all stages, no matter where in the country they're based. Coming back to Business Finance Week itself, an important part of these events is to understand the real nuances about the finance markets in different parts of the country. And so we want to hear as much feedback as we can from those participating in these sessions. I really hope you find the week useful, and whichever event you attend, you can learn more about the finance options and information that can help your business best succeed. Thank you, and over to the team.
Thank you very much, Louis. Fabulous introduction to what is sure to be a fabulous week in Business Finance Week. So the purpose of this session, it's titled Making Sense of Startup Funding. Where do I start? And the simple answer is here with Startup Loans. So I'm going to be facilitating the session for today. What we have for you today is a brief canter through what the startup scheme looks like, the loan applicant journey. I'll be introducing some of our fantastic SUL ambassadors, all recipients of startup loans who've gone on to start their own businesses. And then we'll be finishing up with a Q&A session. So please do submit any questions that you have. Some of the introduction to startup loans I will go through at speed. Louis already covered some of the content anyway, but if there's anything that you do need expanding on in them, please do just put a question into the Q&A and we'll make sure that it's answered. So if you'd like to move on, please, Sharon. So who are we? So as Louis already said, we're part of the British Business Bank. Our explicit mission is to help new and early stage UK businesses access affordable finance and mentoring support. We are specifically here to help those furthest from finance. So entrepreneurs who maybe are struggling to find finance from mainstream sources, or simply because of the nature of their business being a startup, finding it difficult, we're here to help get those businesses off the ground and to go on to bigger and better things. So we support new jobs, economic growth. We've got a key view on diversity across ethnicity, gender, and regions. And we provide pre and post loan support. So it's not just a matter of making an application, there's wraparound support along that journey to help budding entrepreneurs put their startup loans application together to create a business plan, to create things like cash flow forecasts, and to do all the things that are necessary to actually start a successful business. And then once the loan has been granted, then we provide post loan support as well. There's a host of online facilities that are accessible to both applicants and loan recipients. But also we offer free post-loan support with mentoring and webinars, and we offer that for, up to a year after taking the loan. Next slide, please, Sharon. So what is a startup loan? So we offer loans between £500 and £25,000. It is not a business loan, it's an unsecured personal loan. So it is CCA regulated on all those protections for consumers. It's at a fixed interest rate of 6%, and we offer them over 1 to 5 years. We offer a range of options: first loans, second loans, and tranche loans. I'm not going to go into the details of those right now, but I will make sure that they are explained and expanded upon in the Q&A session. As we've said, you get free application support, templates, and guidance documents. We have a range of business support partners located across the UK to help entrepreneurs on their journey. And as I mentioned previously, there is access to a business mentor for 12 months post drawdown. Next slide, please. So Louis has covered some of these. So yes, our 100,000th loan was delivered earlier on this year. We're now up to 106, and probably in the last couple of months, we're probably hitting 110,000. Over 1 billion of funding. Our average loan size is just short of £10,000. More recent figures are probably around the 12, 13,000 mark, that £10,000 over the lifetime of the scheme. And Louis did highlight the diversity, which is a key pillar of our raison d'etre in terms of female founders, different ethnicities, and 33% of loans to people who were formerly unemployed or economically inactive, which is a statistic we're very, very proud of. Next slide, please, Sharon. So what do you need to be eligible for a startup loan? Well, there's some standard things, of course. So it's a CCA regulated loan, so 18 years of age or older. It needs to be a business that's based in the UK, a UK resident, and the right to work in the UK. When we say startup, we don't mean brand new necessarily. So any business that has been going for up to 36 months, so 3 years, is eligible for a startup loan. And then we offer second loans as well. And the window for second loans is a business that's been trading for up to 5 years. So finance available throughout the early years. It's not necessarily just startups. We do have some eligibility criteria. All of those are available on the Startup Loans website if you need to check them. And we do undertake credit checks and affordability. As I said earlier, one of our key pillars is to support those furthest from finance. So whilst we do have credit checks, they're not a barrier to actually gaining the funding, and we do aim to support startup businesses and fledgling businesses wherever we can. Next slide, please. And we do this through our network of business support partners. So we have national support partners, and they deal with applicants from across the UK, and they deliver on a national scale, and they support on the cross-cutting themes. So the ethnicity, the gender and ESG type objectives. But then we have 12 regional partners as well, and the regional partners, as the name says, they're based in the regions, and they're dedicated to delivering within their regions. They're specialists in those regional economic needs, and they provide localized services and will understand the specific geographic requirements of businesses in those areas. And then finally, we have specialist partners, and they deliver for, well, as it says in the second bullet, they deliver for unique markets, so ex-military, young people, which is the Prince's Trust, and we have a Sharia partner as well who deals with Sharia compliant lending. And again, they are experts in their field. So what does an applicant journey look like? So for that, I'm going to pass over to Alex Mearns, who is the head of lending for one of our regional partners, GC Business Finance. So over to you, Alex.
Yes, thank you, Anthony. Good afternoon, everybody. As Anthony says, I'm Alex Mearns from GC Business Finance. We're a national and a regional business support partner for the Startup Loan Scheme. We've been working on that scheme now for just over a decade. So myself personally, I've been here for that long too. So plenty of experience working on the Startup Loan Scheme, and hopefully by now you've realised what a great scheme it is. So pretty straightforward. How do we apply for the loan? Well, it's all about ease of access. So head over to startuploans.co.uk. There is a link, I believe, at the bottom of your screens under the resources tab. But head over to the website. There's a number of things on the website, a number of resources on there, which I'll come on to in a couple of slides. But the call to action button's right there at the front. They apply for funding, and you click that button, and it will take you through to create your profile on our customer portal. If you just want to click onto the next slide, Sharon, thank you. The applicant journey is broken up, I suppose, into four main parts. The first of those parts is the online application form. As I say, once you've created your profile, you'll be taken through to the eligibility check, which is an online check, and it covers off those points that Anthony's already discussed around eligibility. From that point, once you've created your profile, you can log in, you can manage the account, you can keep an eye on the sort of updates and the status of the application and where it is on this journey. Within the online portal as well is where you'll key in the information to carry out your credit check. Anthony's already discussed there, we want to lend the money. This is about helping people who may otherwise have struggled with mainstream lenders. But of course, as part of that credit check, we're checking that we're doing the responsible thing in lending that money. We have a duty, as Anthony says, under consumer credit to make sure that we're protecting our applicants. But you'll also be able to upload to the portal any documentation that you will need in order to complete the process. There's a number of FAQs on there and guidance materials as well, which can again be accessed via the website. Once you've keyed in the information and you've had the credit check carried out, it will then go through to a business support partner, which is sort of where we come in. With a network of business support partners, as already discussed. What do? Well, we pick up the application, pick up the phone, speak to you, discuss really what it is, your journey, where you want to go. We'll discuss your business plan. We'll discuss all the different, the key business application documents that you'll need for the scheme. But we'll do more than that. We'll look at those documents and we'll help you and support you and guide you in completing those documents. but we'll also challenge your assumptions. You know, we'll make sure that you understand when you're starting a business that you know what that entails and what it takes to actually successfully launch the business. And all of that comes out in conversations that you will have with your business support partner. Once you've completed the documentation, we will then, as a business support partner, put together an appraisal, assess the loan application, and effectively come to a decision as to whether or not it's a viable business and you're in a position, either your business or yourself personally, to afford those loan repayments. It obviously discusses there some loan applications are declined. You know, typically, if it is declined, you will discuss the reason of that with the business support partner, and we can discuss perhaps what needs to change in order to make it a successful application or signpost you to the necessary support organisations. Once it's approved, it then goes through to the finance partner, who is effectively the legal lender. And what they will do is create the loan documentation, and they are now all emailed out to applicants, and it is an e-signature process. Once you've checked through the documentation, you'll be able to then sign the documents electronically, and the funds will be released. All the loans get released to a personal account, but you can change the direct debit over to a business account once those funds are received. They will the finance provider is also responsible for annual statements, and they have an early arrears management team. The early arrears management team is effectively a team of people who are there to discuss any late payments or arrears or any issues you may have with repaying the loan. But you know, they're a supportive bunch, and they should be able to help and signpost if you fall into any arrears, and that's all part of the sort of responsible funding approach. Once it's been paid away, you then get access to the 12 months mentoring support, as Anthony's discussed. And from there, they carry out one-to-ones, workshops. They've got an online platform, a helpline. They'll signpost you to other professional bodies, so you're really expanding that network from starting. And again, FAQs and guidance materials as well. Next slide, please, Shannon. Thank you. Okay, just taking a step back to the website again. The further support, it's not just about the funding this. There are a number of support mechanisms that startup loans offer. A lot of that can be found on the website, or the websites as well of the business support partners. But effectively, they'll have different toolkits, different templates, discuss different events, etc. that startup loans and your business support partners will host. They've also got a great partnership with Open University, Learn with Startup Loans. I recommend you to take a look at that on the website, and a lot more. It's getting added to all the time. It's always worth having a look at the website for any further support, either pre or post taking out the loan. Okay, thank you. Next slide.
Thank you very much, Alex. The next section of today's presentation is meeting some of our Startup Loans ambassadors. So every year we have some ambassadors who, as I said, are recipients of Startup Loans and have gone on to start successful businesses. And they're an outward face of, you know, satisfied customers. So I'm going to introduce three of them today, who can give you a brief summary of what their business is. And of course, they will be on the panel after we've finished, if any of you would like to ask them some further questions. So to start with, I'm going to introduce Alice Wu, who is the owner and founder of Peace and Pure.
Hello. Hi, everyone. My name is Alice. I'm founder of Peace and Pure. As Anthony mentioned, I'll give a brief intro of the business, what I'm doing. So Peace and Pure is a premium beauty and wellness brand focused on the mind-skin connection. which is rooted in psychodermatology. It's a field in dermatology explores the connection between the mind and skin. So we are producing, creating products that is targeted at stress-induced skin problems, such as premature aging, dehydration, sensitivity, acne, etc. So our brand is very much around the holistic side of our skin and our how our emotional well-being connected to our physical well-being. Yes, I'm very happy to be here to talk about my experience with startup loan and my general experience of starting your own business. Thank you.
Thank you very much, Alice. And secondly, I'd like to then introduce Nirmala Warwood, who is the founder and owner of Thatch and Stone.
Hello, good afternoon. Thank you, Anthony. I'm Nirmala. I've got a company called Thatch and Stone Homewares, e-commerce only company, and I borrowed £25,000 for the simple reason of buying the stock that I sell. Enabled me to buy a container to house some of the stock that I was importing. And yes, I approached the startup loan company at the beginning of COVID, which was March 2020. On hindsight, probably not the best time, but it was a very easy application in the fact that I was talked through it. I had the same person dealing with my application from beginning to end, so there was no repeating my story to various different people at the other end of the phone. The young man that I dealt with was very efficient, very helpful, and he offered, the best thing about it was that I could use him as my mentor to go forward, and if I still on the odd occasion speak with him now. So the benefits of using the startup loan company are many, and the biggest one I'd say was the fact that the interest rate stays the same throughout the term of repayment term. So yes, it's helped me immensely, and I wouldn't change it, and I would go for it time and time again, and I would recommend it time and time again, way over a high street branch. So that's my story, and I would suggest that anybody that's thinking about it would go for it.
Thank you very much, Nirmala. Excellent ambassador role played there.
Thank you.
So finally, last but not least, one of our most recent ambassadors, so one of this year's cohort, Pallavi Ghosh from Anav.
Hello everyone, I am the founder of Anav Home, a place for handcrafted and natural homewares. At Anav Home, I work in collaboration with rural artisans and social enterprises from around the world to curate my collection. My journey began in 2021 when I lost my job as finance manager to redundancy. And this event was a trigger for me, as the passion to do what I was doing for the last 15 years was dying inside me. I think many of you will relate to this, that the pandemic prompted us to reevaluate our priorities. And that's when Anav Home was born. So Anav Home had been a dream incubating inside me for years. My passion was nurtured by my mom's love for home decor, for artisanal home decor, which we could not afford because I come from a very humble living. And also my mom's commitment to sustainability. And my passion was then further fueled by me working for 5-star hotels, where I was exposed to premium home decor. And also then I had the opportunity to work for iconic Liberty of London, where it was like my idea kind of exploded. So Anav Home was born. At Anav Home, our values are product, people, and planet. And in everything that we do, from doing the buying to having the shipping to the day-to-day activities, I keep these 3 pillars in mind, or what we call as our 3 Ps. So I invite you to explore our offerings and know more about our journey at our website, anav.co.uk. Thank you very much for listening to me.
Thank you very much, Pallavi. So we're now going to move into the Q&A session. So we can just move the slide on, the panel session. So I'm not going to reintroduce everybody who I've already introduced, but I will introduce Amy Ramsden. And Amy is one of the managers within what we call the Hub within Startup Loans. And the Hub is the internal business support partner. So Amy is an expert in dealing with businesses, very similar to Alex. So if you'd like to come back, Alice, Nirmala and Pallavi would like to come back on camera. Great. So we do have some questions already, and I'll allocate them as best I can. I think some of them, by definition, are going to be for me. But to start with, I'm aware that when I went through the slides very quickly, I touched on second, first, and tranche loans. Amy, would you just like to give us a quick overview of what each of those products entails and how they support fledgling businesses?
Of course, yeah. So hello, everybody. First of all, we'll talk about what we call first loans, but that would be your kind of initial startup loan. So that's where you haven't applied for a startup loan before, you've never received any funding from us, even if it's for a separate business. Then we offer what we call a first loan for you. So this would be for businesses that have been trading under 3 years, and the loan's up to £25,000 per individual on the business, and we can lend to up to 4 different business partners. So in effect, the business can borrow up to £100,000 across 4 different business partners. Now, when we look at the first loan, we can split that into what we call a tranche loan. So what that is, and we do quite a lot of these because it's really helpful for customers where you may need a bit of more of a cash injection further down the line. So we kind of split the loan up. So we maybe do an initial loan of £10,000 to start your business, to buy some supplies or stock or whatever it is that you need. But then we say, okay, so you can come back within the first 9 months and get an additional £5,000, and it just gives you that bit more of a cash injection to then market the business differently, or whether it is that you're starting off with fewer kind of machines or tools or like lesser amount of stock, but if the business has taken off, you want to spend a little bit more money and buy a little bit more of that. That's something that we offer with a tranche loan. And it means that in the beginning, it keeps your payments lower. So obviously a smaller loan means smaller payments. So it means that when you're starting up for your business, that keeps your payments lower to allow you to start. And then if you want to come back for more, you can do, but you don't have to. But it's a pre-approved loan. So you've already gone through the process for that. It's already gone through our credit department, because kind of Anthony is in charge of, and it's already been approved. So you just come back to us, and as long as you'd met the conditions that we set, so whether that was showing us the business bank statements and looking at the trading, or that you'd won a contract, or whatever that may be, it's a much simpler process, shall we say. And the second loan is exactly that, a second loan. So if you wanted to come back in 3 years' time because you'd paid some of your first loan off, and again you needed a bit more of a cash injection into the business, or you wanted to grow or expand, as long as you've been trading under 5 years and you've received a first loan from us, you can come back for a second loan. So you can borrow up to 25,000 at any one time. So if you'd borrowed 25,000 4 years ago, for example, and you'd paid X amount off, 15,000 off that, and then you came back to us, you could borrow that other 15,000 again up to 25. But that isn't pre-approved, so it would need a new credit check, and we'd be looking at your accounts and looking at your actuals and kind of where the business was and what you needed the funding for. So in effect, that's the second loan is a whole new look at, just like the first loan is, in terms of kind of filling in documents and things like that, a whole new review of the business in effect. So that's just a little bit about kind of what products we offer. And also the first and the second loan can both be tranched as long as the other one hasn't been. So if the first loan was a normal straightforward loan, not a tranche, you can have a tranche loan on your second loan, or vice versa.
Thank you, Amy. So we are getting quite a few questions in now. Just for the participants to be aware, we will answer the ones that we can. We've probably got more than we can answer in the time. Anyone who has submitted a question, we will respond directly to the person who has asked the question. So if we don't get round to your question, please don't despair. You will receive a response from us. And of course, if you want to follow up on that response, we're here to help. Also, just worth saying that the slides from this event will be available on the Business Finance Week website. So again, if we went through them fairly quickly and you want to revisit them and then ask any questions, well, please do that. We are here to help. So I'm going to go to the first question. I think probably it's actually for me. And the question is, can individuals with adverse credit be accepted as it's a personal loan? And I guess the response to that is it depends how adverse the credit is. It's quite a wide question. What I can say is that we are very, very supportive. And as I said at the outset, we are there to accept loans for entrepreneurs who typically would not get that lending from mainstream lenders. So yes, you can with adverse credit. There will always be a conversation with a business support advisor, and a lot of it would depend on the strength of the business as well. So maybe if there's adverse credit, but there's a very strong business proposition, then that would be acceptable to get the funding. So please don't be put off by an upfront credit screening. It's obviously there will be some declines in there, but typically we accept about 80% of the applicants that do apply for us. And given that those applicants, such as yourselves, are both people trying to start up businesses and the people furthest from finance, that's a very healthy statistic. So please do. So I am going to go to another question, which is on a similar theme, and I'm going to ask this one to Alex. And the question is, how can you improve the chances of getting a loan approved when they're just starting up a business?
I think a lot of that comes down to being sort of open and honest. The way we look at these applications is, as you've said, Anthony, is we're looking for reasons to support an application. You might go to a lender and they might be looking for reasons to decline. And what we're trying to do is find a suitable way to support you in your business, but not be detrimental to your financial situation. So I think from my point of view, it's having those open and honest conversations with your business advisor or with your business support partner. And they will challenge your assumptions. They will discuss your business plan with you. They will check if you thought about any pitfalls or typical faux pas. They're very experienced in starting up businesses. So don't take that as a challenge to you personally. That is very much the business support partner trying to find a way to support you in your business. Obviously, Amy discussed there the tranche loans. They are very they're a nice technique really to help people to lessen the risk on an individual, not taking the full amount up front. That certainly helps. So have a think about, not creating a wish list of things that you want to spend £25,000 on. It's not really about that. It's about, right, what do you need to help you launch this business and then to grow it organically with any retained profits and the business look after itself. So for me, it's being open and honest from the very get-go with your business support partner, and having those discussions as to what it is you really need from the loan. But listen, you know, as an applicant, you're the subject matter expert. So have faith in your ethos and carry it forward, but obviously accept the support, and you know, you'll find a way. I'm absolutely sure of that. Hope that answers the question.
Thank you, Alex. Thank you. So where to go next? I'm going to go to our ambassadors next. So if we can start off with Alice again. So Alice, what's the biggest lesson that you've learned in your journey of entrepreneurship so far?
I think it's about taking the action now. So that means as a startup, you always feel you don't have enough resources, you don't have enough people, or you don't have enough money, you don't have enough authority to do what you want to do, especially you don't have enough money. Sometimes you would wait for the perfect condition to arrive. And then what I found is the biggest lesson I've learned is to act today, to act now, to whatever resource you have, do what you can, and then gradually the resources or the contract, whatever, will arrive in time. But you basically don't have that sense of fear that I don't have enough, and then or I feel somehow this area I'm not good enough, so I delay it. But just do what you can, and then do your full day's work, act on today. That's my biggest learning.
Thank you, Alice. Same question to you, Nermla.
I'm going to agree with Alice completely. That's very good advice there. Don't wait for tomorrow. Don't leave it as long as I did. I mean, my regret is that I didn't do it 10 years ago rather than wait until I'm almost retired, because yeah, it's not the right thing to do. And don't be fazed by business plans and things like that. The startup loan application has been by far the easiest thing to do, and go for it is the best advice, as Alice has just said. Don't wait for tomorrow, go for it now.
Thank you very much, Nermla.
You're welcome.
And Alavi, same for you. I know it gets harder when you're further down the list because people have stolen your answers.
And they have actually. So basically, I was going to say a similar thing. Not maybe just so much about the resources, but also about sometimes the fear of not knowing everything at the start kind of holds us back. And this has certainly been my journey, that when I started my business, I kind of like, there were a lot of things that I didn't know how to do. I mean, I come from a finance background, but I have always worked in big companies. So I didn't know how a small business worked. I didn't know how to do VAT returns and stuff like that. So when I started my business, I tried to do everything myself, because of saving the money as well. But at the same time, it was about learning that thing as well myself, so that tomorrow, if I do grow, I know a bit about what I'm asking other people to do. So I would say that, don't hold yourself back. If you don't know everything right now, you will figure out as you go along. And again, similar thing, do not worry about things that do not exist yet. That's my biggest lesson.
Thank you, Pallavi. Okay, we're going to move on to one for Amy. I think there's a very obvious one-word answer to this, but if you can expand a little. Is it possible to use the loan for acquisition of a small business?
Yeah. So yes, I can expand a little bit. Yeah. So we have people applying with all different backgrounds and businesses. So that might be, we have franchises, we have people buying businesses that already exist, and people completely, I've seen a question in there and I'm probably jumping ahead, but whether you need to start your business before you apply for it. The answer is no, you don't have needed to start your business. So again, we say trading under 3 years for a first loan, but that could be a brand new business it could be something that's been trading, but it's not your business right now. So it's, it might have been a business that's been trading for 30 years and you're deciding to purchase that business. That's fine. That's new to you. As long as you've not been a director of that business or involved within the ownership of that business, then the answer is yes, you can do that. But also on the other end of the scale, we don't expect you to have started your business. We are well aware that a lot of people that are applying for a startup loan require the startup loan to start their business. So to buy stock or to pay a deposit for rent or to buy vans or tools or, whatever it is that you might need, we're there. We're there for across the board. The things that we ask for from you are dependent on how where you are, I suppose, in your business. So if it's brand new, we'll be asking for, just projections and looking at kind of the research and things that you've done. If it's an already trading and existing business, we might be asking for bank statements or tax returns or, something to prove last year's accounts, something to kind of, so we can look at where you are, what you need, and what the expectations are from that business.
Thank you, Amy. So I've got a couple for you, Alex. The technical questions about the structure of lending. So we have one that I think Amy alluded to. But when starting a business, a new business owner might find that they're paid very little because they're still building their customer base, and therefore may be a little concerned about using the loan just to pay repayments at the beginning. Do we defer repayments for the first year, or do repayments start straight away?
Yeah, so the loan repayments would start roughly a month after you draw down. We do offer capital repayment holidays, which would see you paying the interest only for a number of months, but they will be discussed at point of application with your business support partner. What I would say is, obviously, if you're getting into any trouble with your loan repayments, it's better to be proactive than reactive. So pick up the phone, speak to the early arrears management team, who are obviously trained in all things early arrears management, believe it or not. But they will be able to discuss with you any options that you have with repayments. But the actual loan, when you first take out the loan, as part of the agreement, you would start the loan repayments a month after you draw it down.
Thank you, Alex. And then there's a follow-on to that. So I think Amy covered it in tranche loans, but if you could just expand with a real-life example. So somebody has asked, if the borrower was to borrow £20,000 and only use 10,000 for the whole agreed time period, do they pay interest on the 10,000 or the whole loan amount?
Yeah, so you would pay effectively once you've taken the loan out. It is a personal loan. It's your money. You would have to pay back the capital and the interest on that capital. Obviously, as you rightly say there, that's kind of why we have the tranche loans, in case if you're umming and ahhing about exactly how much you need and you're thinking, oh well, I'll take 20,000 instead of 10 because then it gives me that buffer. Well, yes, you will have to pay the interest on that. However, if you have a discussion with your business advisor and say, look, what would the best scenario be here? And they will discuss with you the different conditions that your tranche could be based upon. So it might be, I think in 3 months' time, I'm going to need a bit of a working capital injection because I've got some, I might have orders in the pipeline. I don't need to fulfill them until month 3, or I might be waiting for a contract to come through. And on that basis, then it might be that you could write into your sort of original loan decision, right, okay, well, have a look at £10,000 now, tranche B of say £10,000 in 3 months' time. Once those contracts have come through, you present the contract as part of the conditions, and then we'd release the second amount of funds. But yes, it is a personal loan. So when you've taken out the money, it is obviously your responsibility to make the capital and interest repayments on that outstanding balance.
Thank you, Alex. So there's a couple that I will take then. So we have a question about are young people specialist, and what age range do they work with? So our young person specialist is the Prince's Trust. For utter clarification on that, I would advise you to visit their own website. I mean, clearly for a personal loan, as stated opposite earlier, one does need to be 18 or more to actually take out personal lending. I think the range is probably up to 25, but the Prince's Trust, whilst they do facilitate startup loans, are one of our our long-term business support partners. They do work with applicants younger than 18 who wouldn't be able to access a startup loan from that perspective, but they will work with any younger applicants to actually move them forward into a position where perhaps a startup loan is the option for them. So they will provide all guidance and support. And then we have a second question about mentors with experience in green energy. I'm not sure by mentor whether that question is actually addressing the post-loan support, i.e. once a loan has been granted, or a business support partner who is actually advising the customer on their loan applicant journey. What I can say is that the green economy is very, very important to us, and we will do whatever we can to support it. Within the bank, we do have a dedicated team that looks at ESG in general and specifically the green economy. So if there was any special requirement for advice on a green focused business, then we certainly would be able to put the applicant in touch with those people or reach out and get any answers that you required. And I think for our post-loan support, I think there are mentors who do actually have that expertise. Amy, I think another one for you. Are there any early repayment penalties?
I think it's again quite a short answer. No, no, there aren't. So I know people want to take loans out and think about taking loans out from other lenders, other mainstream lenders. You tend to think about shorter loan terms, and that's better because you're paying it off quicker and all that sort of thing. You take the loan term, it's up to 5 years, so it's up to you how what years, and depending on your circumstances as well, with different things which your business advisor would discuss with you. But overall, if you took the loan out over 5 years and you could pay more and pay it over 3 or 4, no, there aren't. So consider that when you're thinking about your loan payments and thinking about what's best for you at the beginning of your business journey as well.
Thank you, Amy. And this may have been covered, but also could you expand, please? We've got a question about, could you cover the repayment terms and period of the loan? So you can reiterate
I can.
how it works.
Yes, so it's a flat rate at 6%. It has been for a long time. And so that's kind of what you pay on there. You can borrow between £500 and £25,000 up to a period, or between 12 months and 5 years, basically 60 months. So on the Startup Loans website, there is a repayment calculator in there. So you put the amount that you'd want to borrow and the amount of time, the length of time that you want to borrow it over, and it spits out how much it is, monthly payments, how much you're borrowing overall, and then how much you're paying in interest as well. It shows you on there, and you can play with that a little bit if you wanted to go on and just look at what's right for you and what's best for you and kind of working out what you need. You can go on there and have a look. It's just a kind of a sliding thing where you can up the term and lower the term, and up the amount and lower the amount. It's really easy to use.
Thank you, Amy. I'm going to go back to our ambassadors again, if I may. So we'll do it in reverse order so that this time, so that Pallavi can get her answer in first. So you've talked about your business, but could you just tell us a little bit more about your actual experience when you applied for a startup loan?
Yes, certainly. So I started my business in 2021, and I took out the loan sometime in at the end of 2021 or the start of 2022. So during the period when I had this bit of my business going, I was searching for the funding, and there was a lot of talk about government support for the existing businesses because of the impact of pandemic. So I did my research and I went to the .gov website, which is where I found the link to the startup loans. Once I was there on the website, I found the application process to be very straightforward. There was very good guidance about how to apply and the templates about how to prepare for the application, all of that. So I think from the time that I applied to when my application was approved, it was actually just a month. But I would say what took a long time is the groundwork that I had to prepare to make sure my application is robust. And I think that's what Alex was touching about, is that make sure that your application is kind of foolproof. So I had almost spent a year in doing a test and learn phase where I was just selling 4 products on Etsy. This was before I applied for the loan. And I think this really helped my application because I had some solid data to back up my application. And when I applied as well, and I think something that Nirmala touched upon as well, that the advisor that was given to me was one person from start to finish, who actually later became my mentor as well. So that made it very easy for me to, do my application. Like, again, did not have to repeat my story. And he was very helpful in kind of picking out stuff from my application to say what is right and what I need to maybe work upon and all of that. So I would just say that, the application process was really straightforward. And actually, I forgot, there's one more point that I would like to say, is that, there is, I was asked to for me, because when I was doing my business plan, I was saying, okay, this is the amount of salary that I was going to give myself. But then when I sat down and started doing my personal expenses, I kind of like realized that this is something that I really need to work upon, because I cannot cover with the money that I'm getting from the business to cover the expenses that I have. And that kind of triggered me to look for a part-time job as well to be able to support my cash flow. So I would say that my personal experience has been almost like insightful for me. So the application helped me to work out my own personal finances as well. So it has been a great journey applying for the loan.
Thank you. Fabulous answer. Nirmala, is there anything left to say after that?
Well, I was so engrossed in listening to Pallavi, I've forgotten what the question was. Sorry.
It was about your own experience actually going through the application process for the loan.
Well, the application process, like Pallavi has said, it's the preparation that takes the time. But I did have my mentor help me through the preparation, and that takes the longest time. But what I will say is, don't be daunted by that, because there's a lot of support ongoing. And since my loan application and since getting the money, I've continued to liaise with my mentor, and since becoming an ambassador, it's really, really helped me and my business with all sorts of things that everybody needs, such as marketing, such as focusing on your business and the support that you get, and talking to other like-minded applicants, the ambassadors, and to hear their stories. And it all helps you with your own business. So the application is just a small part of the ongoing story of the Startup Loans Company. Whereas for me, I would never go back to a bank. Sorry, let me rephrase that. I'd think twice about going back to a bank about an application. Yet the Startup Loan Company, I would recommend time and time again. So it's an ongoing process. It's not just the application. So for me, I wouldn't change it. No.
Great, thank you. Thank you. Top that, Alice.
I wouldn't have much to add, to be honest. They summarized it so well. I would echo what everyone's saying about it was very straightforward process. It was quite easy in the process itself. It's more about your own preparation of the business plan and the financial forecast, etc. And the mentoring support was really helpful. After my support mentor reviewing my application and instantly pointed out what areas I need to think more, I need to improve, and then I work on that and then work together with him. It's kind of well, first of all, you need to believe in your own business, and second of all, it is really have that extra sense check of where you are, where your application is strong at, what you need to refine, and afterwards it's kind of certain you'll get your loan, and then it's not that as you apply some other sort of business loan, it was a lot of scrutiny and a lot of check here and there, necessary check, yes, like credit check, etc. But then the business itself is very supportive. Like I didn't have set up a sales before I have the data support. So basically, my projection is what I think this business, the sales can achieve. I didn't have any historical data. So that is another point. If you haven't done what you wanted to do, like haven't tested market, it's not saying you can't get the loan as well, as long as you have a great, like, thorough plan, and then you have think every point you can think of through, and then I think you can definitely get the loan, especially you have a mentor support you to apply the loan. So that I haven't seen that with other bank business loan applications. So that is very helpful and very helpful and very supportive. That's all.
Great, thank you, Alice. So we're very nearly at time. So there are some questions in there. There's a couple about eligibility, which I think are probably easier responded to directly to the people who have asked them, because they are quite specific. But there's quite a number of questions there about businesses that are perhaps have been trading for longer than 3 years and the eligibility of those. So Alex and Amy, I mean, feel free to jump in, but I'll start. So unfortunately, if you've been trading for more than 3 years, no, you're not eligible for a startup loan. But I would ask you to consider what trading for 3 years actually means. So if you're buying a business and that business has been going for longer than 3 years, then you as an applicant would still be a startup. If the business is significantly changing in some way, then again, that might be deemed to be a startup. But generally, 3 years is the cutoff for funding for a startup loans. What I can say is that within the business, we are looking at options to actually provide follow-on funding to small businesses. Right now on the British Business Bank website, there are various options that I would urge you to look at and explore to see whether any of them apply to you specifically. But in the meantime, we are looking at that space in order to deliver something different if possible. Alex and Amy, have you got anything to add to that?
Yeah, the only thing I would add to that is I know some people have fallen foul of this before. Your business incorporation date, say for instance you're a limited company and the date you registered your business isn't necessarily the date that we would class as trading start date. So it's important to recognize that it's pretty much from when business activities such as you raised your first invoice or income cleared into your account, that would really be the trading start date. You may have done a period of test trading. So it's important to consider those factors when you actually talk about your clean trading start date. And that's the only thing I would have added to it, to be fair, Anthony. But if Amy's got anything to add.
Not really, no. I think, again, just like Anthony and Alex have said, it does it is dependent, and we appreciate also, especially now, there may be some dormant periods for people with COVID. So you might have started your business just before COVID hit and then had to kind of close your business in effect for a period of time. So again, we look at every individual case specifically. If it's straightforward, you know, I started trading in 2018 and I've been trading ever since then, unfortunately. It's over the 3 years, but if there are some factors in there, such as periods of dormancy, or you start, as in you registered your business then as a limited company, but you didn't actually start, there are things that we can look at.
Great, thank you, Amy. So we're right on time. As I say, people who have put in questions and haven't received a response in the Q&A, we will respond to you individually. So don't worry, they're not lost. So it just remains for me to thank all our participants today. So thank you to our fabulous business support partner representatives, Alex and Amy, and a special thank you for making the time to our fabulous ambassadors, Alice, Nirmala and Pallavi. Thank you, and I hope your businesses continue to go from strength to strength.
Thank you.
Thank you.
For me, it's a great way to kick off Business Finance Week. Obviously, from small acorns do mighty oak trees grow, and I wish everyone looking to start their business all the best of luck. And thank you to everybody who has joined the session today, and I hope you found it useful. Thank you.
Thank you.
Thank you.
Bye.
Bye-bye.
Thank you. Bye.